It's Monday, the 29th of November, 2021, and the trade of the week this week is Aussie dollar. Now, we're going to break down the different time frames. We're going to start with the weekly chart and look at the technical analysis around that chart and break it down to the smaller time frames to give full color on this. Now, the main formation that is being highlighted from here, we see this impulsive move higher after we had the huge sell-off on the back of the pandemic. This impulsive move higher topped out in February this year. So almost year's worth of uplift on the Aussie dollar, and we stalled, posted almost a shooting star type candle, but a bearish outside candle nevertheless on the week of 22nd of February 2021 earlier this year. As we've moved forward this year, we've had a corrective move lower, and this is close to becoming a reversal. Now, the formation I've highlighted is a head and shoulders formation. This is a very reliable formation in technical analysis, and what it shows is that we had the move higher, stalled, retracement, then the further move higher, formed a new high, and then price action corrected lower. So we had a bit of a correction, and this has also started to continue. Now, what we do is we take a neckline from the low of the first dip to the low of the second dip, and that's the neckline. And we can see price action on Friday, we closed below that neckline. Now, one thing of concern is we haven't broken the low of the second neckline just before the right shoulder. That's the 23rd of August week. We haven't broke below there, but we have tested that level. So that's key for me to have a little bit of confirmation on this. Normally what we see when we break a neckline, we'll see a move accelerate through here, and then we possibly get a throwback to retest the break, and then we get the full move. The measured move target of this move would be a move down to 61.70 according to this chart. So that's the weekly chart. Let's have a look at the daily chart. And we can see this price action has moved lower. We've stalled just in front of this swing low of the 20th of August, where we posted a bullish hammer, and this reversal is known as a morning star reversal, and we got a nice little pullback there. We had a higher low posted on the week of the 30th of September, and now we've got that lower low which we were looking for. So potential from now on the short-term basis. Let's take a look at the 4-hour chart. We can see this downward trending channel. The trend is obviously down, but we have had a double bottom posted on the 4-hour chart. Now this will show a little bit more clearly on the hourly chart. Let's go to here. Let's see this hour here, and let's get the little arrow to show it. Basically these two lows here. The neckline then comes in on this horizontal axis here. That's the neckline. A close above that neckline confirmed the double bottom formation. So on a short-term basis, that will confirm a stall and lead to a potential correction higher. However, remember, on a longer-term basis, on the daily chart, we are in this downward trend. And really, we've got this level coming in just above the 7100 figure, and that for us is a really pivotal level. If we manage to break below there, we'd expect to see stops, and the move lower should continue. So really key to watch this. So two real ways of playing this from a against the trend perspective. We can look to set longs around about current levels. We know where our stop is going to be. It's going to be below the 7100 figure. Or from a bearish point of view, if we really believe in this downward move to continue based on the weekly chart on the head and shoulders formation, then we would look to be selling a break of that 7100 level. So I do expect some decent volatility this week and some follow through on the downside at some point, but potential possibly for a little bit of an uptick first before we get to that more serious long-term down move. Okay, I hope that's been informative. Thanks for joining me.